Welcome back. Well, you're still tuned into Halftime Report on CNBC-TV18. eClerx Services posted what was a good set of Q4 numbers with the rupee revenue up around 5.18% on a year-on-year basis. The top 10 clients saw growth sequentially, but emerging clients remain subdued. To talk more about the earnings, we have with us Srinivasan Nadadhur, who's the CFO of the company. Srinivasan, hi. Thank you very much for joining in. Well, let's start with a broader question about FY25. Your constant currency growth has been steady at around 11 to 12%. What are you targeting in FY26? Do you think that you can probably maintain this 11 to 12% or possibly better it?
The ambition is certainly to try and do better. But a lot depends on, and to that end, I think the pipeline is good. We're looking at good growth in all of our segments. But a lot also depends on how the external macro environment plays out. And there's a lot of uncertainty on that front. So let's put it this way, that internally we are geared to deliver strong growth in FY26, but there may be some things which are outside of our control.
Okay. When you talk about the uncertainties, what would you think is top of mind when it comes to the uncertain environment for you? And if you could just give us a sense in terms of the top key issues that the company is probably going to deal with in FY26, and how do you probably look to navigate it?
Right, sure. So to my mind, there are about 2 or 3 key issues. One of them is the tariffs that the US has imposed and what effect that might have on our clients, especially in the retail segment. So we may see some second or third order impact of that. Already we are seeing that some of our clients seem to be refocusing their energies on dealing with tariffs and managing that. So a lot of their time is getting consumed on that front. So that's one. The second is something out of the left field, like the India-Pakistan conflict. That might have an effect because it's really unpredictable, and that may lead to a lot of nervousness on the client side. And the third is how we are able to use technology and stay relevant for our customers. And that continues to be the case for us all the time. We often think about it. We often think about whether we are doing the best we can in terms of using AI and other technology to deliver the absolute best for our client.
We were thinking of asking you about AI a lot later in the conversation. We will ask you about that. Hold on to your thoughts there, because attrition in the fourth quarter has been very high as well. Q3 it was 18.8%, fourth quarter was 24%. So wanted to know if there was something structural out here. But as far as this year is concerned, if you could give us a sense, last year you grew between 11 to 12%. Your deal momentum was fairly high in the fourth quarter. So whether that sustains or not. And this 24 to 28% margin band, you're at the lower end of that for the last, I think, 3 or 4 quarters, so to say. Do you maintain that band, and what part, the lower end or the higher end of the band, will you achieve in this year? So on your revenue, deal momentums and margins, if you could give us some sense.
So deal momentum continues to be strong, as you have noted, and there has been a significant shift in the last couple of quarters in particular. So if conversion happens as earlier, then things should go pretty well for us. On the margins, I think for now we are sticking with the 24 to 28% range for EBITDA. And given the fact that we've opened a couple of new centers in Lima and in Cairo, there is going to be some amount of downward pressure on margin, and therefore we'd like to stay within this range and see how things turn out.
What is this range? If staying within this range is what
24
range?
to 28, which includes other income, actually.
Okay.
Revenue, 11 to 12%, possible?
Let's see. I mean, it's kind of hard to predict, and we normally do not give guidance. That's why I'm sort of refraining from giving a number.
Okay, I just wanted to circle back to the uncertain environment that you were talking about when it comes to tariffs. Geopolitically, yes, we probably haven't seen the impact as of now. But with regards to tariffs, are you already seeing any kind of impact in terms of your client wins, in terms of, say, closing contracts? Is that already coming into effect for the company?
No, not really, not at this moment. Although what we are seeing is that some of our clients in retail, high tech, etc., they are having to devote more of their time in trying to understand and mitigate the impacts of tariffs for their own businesses.
Okay.
It may lead to some amount of slowdown in decision making for us, but no significant impact seen at the moment.
So what are you predicting when it comes to, say, your top 10 client growth and as well as your emerging client growth, which I think top 10 grew around 7% on a sequential basis. Emerging clients grew over 4% Q on Q. Are you replicating that kind of growth going forward every quarter?
So we'd like to focus more on our emerging, and some of the things that we want to do is to have more discipline around the sales operations, try and cross-sell our services into all our large and medium-sized clients. So it's hard to say whether top 10 will grow faster or emerging will grow faster, but the long-term objective is for us to drive more growth in emerging.
Right. What about, attrition? It's higher in the fourth quarter. What caused that? And the corollary question is artificial intelligence. Everyone's been talking about, how they're looking to lay off a lot of people because the low-end jobs would be replaced by artificial intelligence. What is your company's policy here? And what's your outlook here?
So attrition for us operates in a certain range, and I think Q3 was a little lower than usual, Q4 maybe a little higher than usual, but we're not really concerned about it as long as it stays within a certain range.
What is the range?
So excluding the bottom quartile, I think between 20 to 30 is okay with us.
20 to 30 is quite a range. I mean, that's either a fifth of your employees or a third of your employees. Just trying to figure that one out. And artificial intelligence.
So on AI, our objective is, the way we look at it has always been that it is more of an opportunity than a threat. And what we are trying to do is to try and embed Gen AI and Gen AI features into all the productized services that we are performing, therefore allowing clients to use the best that AI has to offer. So,
okay. If we were to have this conversation, say, a year from now and discuss AI, how much of it do you think would be contributing to your business as compared to now?
So today's number is very small, and that's because there's a lot of pilots happening. Clients are in the midst of decision making. Hopefully, that number next year, when we talk about, will be a lot larger, but hard to put a figure to it.
All right, take that point. Hopefully, we have a lot more in terms of visibility when we speak next. But for now, the key takeaway is that you're striving for growth this year, irrespective of the environment, with deal momentum continuing to be strong and margins in that wide band of 24 to 28%. Thank you so much for joining in. Wish you good luck for this year. Take a short break, come back, get you more on the markets, a lot of stock-specific action on the other side.